Take a quick look at shares of Goldman Sachs, which are up about 50% in the nearly 5-year tenure of CEO David Solomon. But after a recent series of unflattering articles about his leadership, is the stock performance the only thing saving his job right now? Hugh Sun, CNBC.com banking reporter, joins us here on set. And you just spoke with one of the men at the heart of one of these recent reports, former CEO Lloyd Blankfein.
Former CEO Lloyd Blankfein, who's come on air multiple times. So let's set the context for this conversation. He was a little bit upset at the New York Times. The New York Times had a big profile on David Solomon, in which the lead anecdote was a conversation between Lloyd and between David Solomon about the supposed impatience that Lloyd had with the progress they were making, things like that. What Lloyd said to me on the phone about an hour ago was that it was mischaracterized, that the conversation happened, but that he didn't express any kind of impatience, and that he was actually very supportive of David, that he wants him to have a long tenure, and that he's, that he's in his camp.
One of the quotes, if I'm not mistaken, was that he reportedly said he needs to spend, less time on the jet and DJing, something to that effect.
That sounds familiar, and that perhaps was part of a different story. But in general, it positioned the two men as sort of at loggerheads. And what Lloyd wanted to make very clear to me was that he was supportive of David, and that his conversation was mischaracterized. And to take it one step further, guys, we all know about this trend of sort of boomerang CEOs. You've had Howard Schultz, you've had Bob Iger come back to take their jobs again and in return to their CEO job. I asked him point blank, I said, Lloyd, are you going to pull up an Iger here? And he said, look, there's no intention of that he has got, for the most part, he's enjoying his retirement, and that he really, had no thought, and there's been no conversation about returning in any way like that.
So what about Solomon? I mean, apart from the article, apart from any friction, which it sounds like there is little between Mr. Blankfein and Mr. Solomon, what about Solomon? Is he a survivor?
Solomon? Yeah, so I've had conversations with other partners, existing and former partners, who talk about the morale, and they say that it is low. It's not a fun time to be at Goldman Sachs right now. There have been other times in which it's not been fun at Goldman Sachs. You guys all recall the Vampire Squid era in sort of the 2008, 2009
time
period after that. And so, we talked about, and we have talked about
the rivalry between, who was it, Corzine and Paulson. These were difficult times.
Or just the narrative that Goldman had benefited from, the woes of the financial crisis, and had come out, looking remarkably well after the financial crisis had destroyed a lot of other firms. And that narrative certainly took hold for many years. It is an unpopular time to be at Goldman Sachs, but, for the most part, they're used to that. I think, for what it's worth, as long as the stock, and we pointed to it earlier in the show, holds, as long as the Goldman stock does not collapse, then he has some time. And he has time to execute his strategic vision here, which is to increase the amount of fee-based businesses, fee-based revenue that the bank gets, to sell some of their consumer businesses.
Consumer banking was a notable stumble, correct?
Yes, I think anybody would look at this, and I've talked about this, about how it was both poorly executed and was a strategic error. And by the way, they moved too fast into it, and then they pulled out too quickly. That much is clear. But for the most part, they're saying that is sort of in the past, although they're still paying for it. But the future looks potentially brighter.
If you look at the stock performance, you see let me call them the big three, J.P. Morgan Chase, Morgan Stanley, and Goldman. All right? Morgan Stanley stock there it is. Morgan Stanley stock is the outperformer there since Mr. Solomon took over. And I can't imagine that Goldman, which is accustomed to being the top cat in this competitive set on Wall Street, likes what it sees there.
No, and they can't be happy with this. Now, you have to look at the context. They are the most levered to the Wall Street businesses of trading and investment banking. Those businesses are in a cyclical lull.
And Morgan Stanley has moved into asset management and asset gathering to a different scale. I mean, that's been their strategic focus,
in which they get annuity-like streams of revenue.
Correct.
They get paid more or less, regardless of what's going on in these other parts of Wall Street. Yeah.
They do better when you do better, right? In other words,
incentives
to borrow somebody else's slogan.
Goldman hoping for maybe an IPO return, some deal-making activity. We've talked about a lot of different areas that might happen. But meantime, what's left of their consumer play?
So the consumer business is under a cloud of sort of intrigue and uncertainty. We don't know whether or not they're holding on to the credit card business. There is some talk that they've talked about unloading that to Amex. So that is in itself a source of uncertainty and volatility.
This is their Apple branded card.
This is the Apple branded card in which they have, I recall, something like a 10-year deal left with Apple. So this is a long-term thing. And they would need, by the way, they would need Apple to sign off on that unloading that transaction because it was a contract. And for the most part, their consumer businesses will look like, at the end of the day, just the deposit-taking operations in which they take money from on the Marcus platform. They pay people like me and some other folks at 4.3% currently, and they use that money to fund their businesses.
All right. Hugh, real quickly, there are some who say that these problems go back to Blankfein and are more attributable to him and some of his decision-making than Solomon. I don't know if you asked him about that point blank, but what would you say about that criticism that, which we see sometimes with CEO transitions, that the one who's under pressure says, well, these problems weren't necessarily of my making?
Lloyd's been gone for 5 years.
Yeah.
That's what I would say.
Right.
He owns it today. Solomon owns it without a doubt.
All right. Fair enough. Hugh Sun, thank you so much for bringing us your reporting. Appreciate it.